Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar yesterday ran into all sorts of bearish trouble and sank to a fresh 11-year trough, with the market posting an overnight low of 66.09, the lowest seen since March 2009. Yesterday, the People's Bank of China lowered its benchmark lending rates to stimulate an economy threatened by the corona outbreak. Besides that, the Australian Bureau of Statistics, the ABS, released the unemployment rate, which edged up from 5.1 to 5.3 in January, moving further away from the RBA's desired rate level, that is, of 4.5%, even though a better than expected employment number did come out at 13,500. Crushing the forecast of 10,000. Furthermore, the number of jobs was 46,200 new full-time positions and a decrease in part-time jobs of 32,700. Nevertheless, the market will now ponder on whether we will see a rate cut next month in March, or will they hold and wait till April. From a technical point, though, from the level being crushed at 66.60 now reaches its first objective of 66.05. With the outlook now looking down to 66.55. Any rally should respect the levels around 66.45, but a supply zone now coming in now at 66.75 to 85. It was surprising to see the euro drop further overnight after the US dollar staged yet another rally and post a fresh 3-year high of 99.79. This, on the flip side, saw the euro crush the level around 107.77 as an intraday low, but the support still holding at 107.55. I'm still holding a neutral view because we are extremely oversold. There is bullish divergence shown here, and the trend is nearly depleted on the ADX, which does imply that a recovery may be coming back towards 108.35 to 108.80. So still continue to lower your stop losses according to your risk management in case of a rebound. I hold a neutral view for dollar yen. Very surprisingly, the fact is that the market has shrugged off the Japanese yen safe haven bias. And the fact is that more cases apparently are emerging of the coronavirus in Japan. There is also talk that the country is heading into a technical recession after months of falling industrial productions and Q4 GDP contracting. From a technical point, as I said, I'm neutral, but there is resistance seen around 112.45. So let's see if the market bears can contain the rally as it has progressed now for 2 days. Looking at the pound, it weakens further overnight, and as you can see, he's heading towards the level of 128.45. A break beneath there would give further scope to the target that I'm holding now at 127.80, with any rebound limited with the resistance seen around 129.15 to 65. The dollar CAD's rebound back to the top side of its range around 132, and I still believe the market will test lower. And let's see if the market can reject the level around this region, seen around 132.60, 70, and drop back towards the downside, with the objective remaining to the lows around 131 to 130.70, 90. Finishing up with the gold and oil, is the market reaches its first objective after the break of 1,615, after hitting a high of 1,623, a new 7-year high. It is assessed that the bulls are still here and they're still likely to challenge. And if we see a break of 23, looks up towards 30.33, with the objective of 40.45. Do take note that the supports are moving further and further away as this extension continues, with the first seen at 1,617.18 support, and then 1,611.12 to 1,600. I'm going to actually step away from oil for the moment. I believe it's reached its objective of 54.5, and therefore could see a small pullback. This could be anywhere between 52.5 or 51.5, so do be on your guard if you're trading from the long side. However, a close in New York above 54.5 may give further stretch to $56 a barrel, but I'd rather sit out neutral for the moment and wait for opportunity to buy the dip. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this day and the new weekend.